Good morning, everyone, and welcome to the webinar. We are waiting another minute so that people can join, and we'll start shortly. Welcome to today's webinar. Before we start, we would like to go through some housekeeping. During the webinar, all participants are put on mute. And if you have questions, please put them into the chat box, which you can find in the top right corner. There is a question box. And at the end of the webinar, we will have enough time to answer your questions. If some of the questions cannot be answered during the webinar, we will get in touch directly and provide an answer after the webinar. The slides will also be provided after the webinar, and you will receive a link to the recording of the webinar. In today's webinar, I am joined by Alexandra Sauer and Johanna Tensi. Alexandra leads LRQA's European Sustainability Strategy and Disclosure Advisory Team. Her team supports companies on their CSRD journey, including during the double materiality assessments. Johanna is a consultant in Alexandra's team and has been working on various double materiality projects and also works on the advancement of our double materiality approach to ensure ongoing compliance with regulatory requirements. My name is Mario Wernli, and I will guide you through today's webinar. I'm working as senior consultant in Alexandra's team, and I'm the topic owner for sustainability reporting and regulation. Before we dive into the topic, we would like to start with a few words on who we are and what we do. LRQA is a leading partner for global assurance services. We have more than 5,000 experts engaging with our more than 61,000 clients globally. We support the clients in managing a new and ever-evolving risk landscape. This is highly relevant as global supply chains are getting under pressure, cyber attacks are prevalent, and due to a changing ESG risk landscape and increasing regulatory requirements. We have a broad portfolio of services with which we can help clients navigate these risks, assuring assets and management systems demonstrating compliance, for example, certifications against ISO standards. Achieving product integrity is another challenge, especially in the food and healthcare sector, where we support our clients with, for example, food safety audits and certification, supporting our clients in becoming resilient against cyber attacks by offering security testing, incident response, and cybersecurity trainings. And the three of us are part of the advisory team, providing a range of ESG services, amongst other broad support in implementing the CSRD and other ESG regulation or supply chain consulting services. In today's webinar, we are going to cover three main areas. First, we'll give a short overview on the CSRD and the relevant assurance requirements. Then, and this will be the main part of the webinar, we will talk about various learnings and give practical advice regarding double materiality assessments. We'll end the webinar with enough time for Q&A. Again, the reminder that you can put your questions into the question box in the top right corner of your screen. The focus of this webinar will be on learnings of double materiality processes, as this is the stage at which many companies are at this moment, and therefore the main challenges are in this area. Further, the first fully compliant CSRD reports will only be published next year. and only some companies have started implementing certain ESRS requirements into their reports, but they clearly state that the report is not yet a CSRD compliant report, and hence there is only limited information available in this area for now. Let's start with a quick overview on the CSRD, which is probably familiar to all of you by now. The aim of the CSRD is to make sustainability information as relevant as financial information, so that more capital will flow into sustainable activities. This should support the transition to a more equal and climate-neutral European economy. The CSRD will require many companies to report on their sustainability activities, including SMEs and also non-EU companies. Sustainability reporting will be integrated in the annual report and must be machine readable. Furthermore, the CSRD requires mandatory assurance. Through delegated acts, the European Sustainability Reporting Standards, the ESRS, entered into force. They are providing the detailed reporting requirements for the CSRD. Currently, there are 2 general standards, 5 environmental standards, 4 social standards, and 1 governance standard. In the future, there should also be ESRS specifically for small and medium enterprises and for various industries. During the webinar, there will be 3 poll questions where we are interested in your feedback. And the first is coming right now. So what stage of the CSRD journey are you at right now? Have you just started? Are you currently doing a dry run of the report before you are required to be fully compliant? Are you currently conducting your double materiality assessment? Or have you already finished the double materiality and are defining data points and collecting data for the reporting? Or have you almost finished your first CSRD report? Please indicate your answers, and we'll give you a few seconds to do that. As you can see, it's a quite clear picture already, so that many of you have only just started working on the CSRD, probably preparing for the double materiality, getting an overview of what will be required. Then there's a bigger group who is currently conducting the double materiality. Some actually have already finished the double materiality, are collecting data for the reporting. Exactly, and as you can see, at the report stage, there was only one participant indicating that. Exactly, so you can see many of you, they are currently in the preparation phase, or they are working on their double materiality assessment. As mentioned before, one of the main requirements in the CSRD is that the report needs to be externally assured. The external assurance will at first be limited and then over time become reasonable. Limited assurance is less thorough and extensive and leads to an assurance statement that is formulated in a negative way. During a limited assurance procedure, risk-based samples of the reported information are checked to ensure that there are no material misstatements. Reasonable assurance is more thorough and extensive and leads to a positive statement, indicating that the information was collected and is presented according to the relevant criteria. The assurance processes focus on the quality criteria provided in the ESRS, namely the relevance of the reported information, faithful representation, comparability, understandability, and verifiability of the reported data. Hence, the assurance companies will check if the reporting is compliant with ESRS requirements and complete, which includes the assurance of double materiality assessment. In addition, it will be checked if relevant internal processes and controls are in place for the collection and verification of the data. As a further point, it will be checked if the disclosures reflect the results of the DMA, meaning that, for example, if a sustainability matter is relevant from the financial materiality perspective, that the disclosed information then actually also covers the relevant data points regarding risks and opportunities. Finally, the assurance provider will check the evidence regarding the reported data to ensure that the data is correct. Therefore, it is very important for companies to ensure an audit trail for all reported information. And after this short overview of the CSRD and the assurance statement, or the assurance requirements, I hand over to Alexandra to start.
Thank you, Mario. So also warm welcome from my side. I think we have to find ways to move forward the slides. I'm sorry for this, probably. Yeah, thank you. So in the following section, we will share some learnings from double materiality assessment processes we worked on with our clients from different sectors and also of different sizes. So we will first cover a set of typical problems and topics that arose during these processes, and we'll then at the end have a time to discuss the questions you might have. So to provide a quick overview on the topics we will cover in the next minutes. Thanks for the support. So first, it will be the use of the guidance and the reference documents available. Then second, about the tricky question of assessment level, given quite complex company structures with affiliates spread globally. Then third, the level of stakeholder engagement reasonably needed in the assessment. Fourth, the granularity of assessment, giving the jungle of sustainability meta topic, subtopic, subtopic. And finally, IRO, standing for impact, risk, and opportunities. Fifth, the core question on threshold setting, ultimately defining which impact, risk, and opportunities are material or non-material. And sixth, we will conclude with some practical advice to navigate the assurance process. So since materiality is not a new concept at all, we experience quite different starting points depending on the maturity of the ESG reporting system in the companies. So in any case, we note that CSRD compliant approach requires organizational learning and adaptation to become acquainted with the new or the adjusted approach. So especially there are two cases: companies that have an outward-oriented materialities assessment following GRI already, or those that have rather a financially driven enterprise risk management in place with their financial risk assessment methodology. And both these, let's say, practices have to adapt and they have to cooperate. And in this process, the EFRAG materiality assessment implementation guidance provides quite helpful support. It lays out the key points to consider and provides a four-step approach of materiality, from first understanding the context, identifying IROs related to the sustainability matters covered in the European Sustainability Reporting Standards, the ESRS, assessing the IROs, and then reporting. In addition, there are deep dive sections on stakeholder approach and threshold setting, and explanations on the interoperability with other standards such as GRI, ISSB, and due diligence frameworks. It is really important to state that the guidance is non-authoritative, meaning that it is not legally binding and not part of the regulation. However, it is a very helpful reference point and of course is also consulted by the auditors. And so we recommend really to consider this guidance, but also to take the liberty to adjust your approach to your company situation. applying throughout the process professional judgment on how to best respond to the intention of CSRD. So if you do things differently than explained in the guidance, we recommend to check whether the approach is still in line with ESRS 1, which is the binding regulation, and then document carefully and provide reasoning for the decisions you took. And one of the main questions that is only partially answered by this guidance is a question you have to answer at the beginning of your CSRD journey. And this is the level of assessment and reporting. So given the different timelines depending on company size and location, and also different organizational structures, you might decide to start from rather a global level or an affiliate level. And in this context, we are really curious to hear about your approach. And so prior to dive into some considerations on the level of assessment, we have another poll question that we'd like to share with you at the moment. So I'm trying to put this on. So the question would be, at which level are you doing or planning to do your materiality assessment, as we saw that somewhere in the preparation phase? So is it planned that every affiliate, if you have more, does the own assessment? Are you starting with the required affiliates now and then planning for group level from 2028 onwards? Or are you starting at group level assessment from the beginning? So we see the answers coming in. Give some more, let's say, seconds, not minutes, to provide your answer. We already see a trend that more than 2/3, excuse me, will start the assessment already from the group level. So really, let's say, taking the bull by its horns and start from global. Yeah, here we see the results. So more than 2/3 start from global, and then we have 1/4 of companies responding that every affiliate does its own assessment. And then we have some hybrid approaches. This is, to be honest, a bit surprising to me. I have not expected the picture that many start from global, but I think that's a good approach. So let's see the pros and cons and what to consider when doing this assessment. So basically, we have two approaches, two basic options. The one is the top-down group-wide approach that can then be broken down to sub-entities, or the bottom-up approach, or even below affiliates. So in general, the ESRS state that any site, location, geography, or sub-entity that presents significant variations in risk, impact, or opportunities should be included with its own disaggregation in the materiality assessment. So the core idea is really to make sure that you account for specificities of entities in your organization. A global approach is particularly feasible if you have a quite homogeneous business model, so you can reasonably expect that your impact, risk, and opportunities are at least similar. This can then be broken down to take account of local circumstances, and I will show you an example for that in a minute. The bottom-up approach is more needed when your business model differs considerably. We see the situation often in heterogeneous holdings with different business models under one roof. So then it would be easier to do an assessment from the bottom, but use the same approach to make sure that you can aggregate at a later stage. So this approach is also recommended for companies, for non-EU companies that fall under regulation at a later point of time, to make sure to start with the EU orders, but then be able to aggregate. So let's take a look into an example about a company that started from global and then broke down as needed. So trying again to switch the slides. I'm sorry that there's some. Thanks. So we choose a disaggregation process there, doing a double materiality assessment on the group level, quite details in terms of assessing individual IROs for each subtopic and integrating the entire process in the enterprise risk management for the financial materiality part to be really globally aligned. And then in the second step, then that's an interesting one, I think, we identified drivers that might cause deviations. For example, differences in the business model, differences in the markets, the regulation of the markets, and differences in the value chain, like different sourcing regions or also different distribution channels. Let's see, for example, if you have own point of sales in one country and not in another. So the thorough understanding of the value chain and the processes is really necessary for this then deconsolidation and localization. In this case, examples have been that we identified that specific product groups have different market shares, that there's different share of blue and white collar workers as a proxy of employment. We use the scope 1 and 2 footprint as proxy for environmental impact of production, and thus identifying in a systematic way differences between the business models. And then the step 3 is the adjustment of the assessment with focus on the areas that have been identified to show deviation. So to give 2 examples, the local affiliate is a marketing organization but has no own production sites. So the impacts in the area of workers' health might be of less importance here, but they move down the value chain. So it's the same impact since you're selling the same product, but the workers of your factories in other countries would then be considered workers in the value chain. That's one example where you see same impact, but at another value chain stage. From the inward perspective, we can think of examples like the financial impact from climate change. If you have no production in a country which requires cooling processes, then probably the financial impact of increasing energy prices due to rise in temperatures would be less in this country. So this is an approach from the global level to come to the local level. Step 4 is the comparison on both results, the sign off by the local management team. And then, of course, in step 5, the information of all involved parties, and then the identification of related data points. For this work, we work with a tool building on unique identifiers, so allowing an automatized mapping. Once you identify your material IROs, that you know exactly which data points you have to report or not. So I mentioned there are sign-off processes, there's assessment, but we have not touched upon the role of stakeholders in this process. And with this, I'd like to hand over to my colleague, Johanna, who will tell you about these considerations.
Thank you, Alexandra, and also hello to everyone. So one of the main aspects of double materiality assessment is the definition of appropriate stakeholder engagement. And that first begs the question, why do we even need stakeholder engagement here? And the ESRS strongly encourage the integration of stakeholders into your double materiality assessment, but they don't give any concrete guidance on how to involve them. And from our understanding and experience with clients, it is especially valuable for identifying the impacts on affected stakeholders. And it seems almost impossible not to consult them for that, especially to find out about the human rights impacts along your value chain. You need to engage with people. And nevertheless, focused and meaningful engagement is important to gain the right insights and not just widely spread generic surveys to everyone. And we want to give you, on the next slide, working? Yeah. And we want to give you an insight into our usual stakeholder engagement process and some tips along the way. So first, base your preliminary assessment on previous stakeholder engagement. And this can be things like employee surveys, customer feedback, supplier engagement, and so on. And this is clearly engagement and dialogue and information sharing with people who are affected by your business activities along your value chain. So use these documents to inform your assessment. And also, this is important, map the stakeholder groups to these sources for assurance purposes to make it very clear which stakeholder groups are covered by which source. And the second thing is rely on external sources to identify impacts, especially on nature and people along your value chain. Because depending on how far away you are from your first upstream value chain step, you don't necessarily have internal documentation on this. And also, nature is to be considered a silent stakeholder, and therefore it relies on external documentation to be included in the assessment. So focus on sources such as NGO reports, industry reports, and scientific studies to gain further insights. And also use available tools such as the Water Atlas, WWF risk filters, or also supply chain software, like for example, our own LRQA EIQ platform. And again, document and map these sources for the assurance purpose. Third, if you can't find appropriate information on a topic internally or externally, you may consider to interview the affected stakeholder directly or a representative. And to gain valuable information, spend some time on identifying the correct stakeholder or the correct stakeholder group and focus your interview really only on those few topics where you need insights for. And then once again, document the process properly for assurance purposes. Fourth is sometimes overlooked because stakeholders are not only external, but also internal people. So profit from your internal business experts to gain their specific professional insights. And we recommend to do a round of validation workshops with internal subject matter experts from various functions such as enterprise risk management, finance, procurement, human resources, and other functions. And to have them provide input for your assessment, but also feedback on the impacts you already identified, and also the validation of your assessment results. And then last but not least, the involvement of senior management is very important. So introduce your senior management to the double materiality approach before you start with the assessment to get the necessary approval. And then definitely let senior management and the board of directors approve the very final results of the DMA and also of the materiality threshold. And you can also involve their expertise and insights during the assessment phase by conducting interviews or holding expert workshops with them specifically. And this creates accountability and it gives you the necessary buy-in to further the sustainability efforts of the company, and not only for the double materiality and the reporting, but also for your strategy development that comes after. And on the next slide, so now that you know our approach to the stakeholder engagement, you still, I think we went one slide too far. We need a different slide. Yes, perfect. So now that you know our approach to stakeholder engagement, you may still wonder, okay, how exactly do I now assess these impacts and the risks and opportunities? And we've created here a blueprint of what your assessment might look like. And I will now give some recommendations on tips. So indicate the sub or the subtopic you are assessing to navigate yourself within this list of sustainability matters, because this list comes from the ESRS and it has some doubling of topics, especially within the social standards. And to indicate where you are assessing right now and which kind of topic you are at the moment, it will help you also to consolidate the topics later to show them, for example, in a matrix. And to identify and formulate the individual impacts, use the internal and external sources I just mentioned before, and scan them for impacts on people and environment. And if you find such an impact, include them in the assessment file. And then you indicate them as either actual potential, as positive or negative, as this will alter also the necessary scoring criteria that are attributed to them. Also, clarify the value chain step and the time horizon for each impact. And then you give the scoring based on your evaluation, either through the internal and external resources, through the interviews you do with stakeholders, through your internal business experts that you consult during the workshop. And the materiality of your individual impacts can then be mapped to the ESRS data points to figure out what exactly you need to report on. Because in most cases, you don't need to consider every single data point in a topic standard, but only those that are material. And for assurance purposes, we recommend a thorough and comprehensive justification for each score, as well as a reference to the sources you relied on to identify and score this particular impact. So build your risk and opportunity assessment in a similar way to this, and make sure that they align in granularity so you can bring the two perspectives together for the final results. And then on the next slide, we will speak about the integration of the ERM. Yes. So mentioning the risk and opportunity assessment, this brings us to the next recommendation, which is to align your assessment with your enterprise risk management if you have one. And the alignment of the ERM and the double materiality process, it helps you with a more efficient and consistent identification and also reporting. And the unified approach eliminates potential inconsistencies between these two risk assessments that look at the same topics, but also a bit of different topics, especially given the granularity of the ESRS sustainability matter list. And additionally, the established risk governance structures that you have already and the risk experts within your company, they can help you assess the risks and opportunities. They can help you identify internal business experts who can speak on the results and who can validate them and help you in the assessment. And further, the risks identified in your ERM can also already inform the assessment of the double materiality assessment and also vice versa. And then next we will have another poll question coming up, because before we share our recommendations concerning the materiality thresholds, we would like to learn more about the way that you approach this topic in your own organizations. And we have a few answers you can choose from. If you set your thresholds for each assessment beforehand, if you set a threshold initially, but then you allow the changes later, if you have the final matrix and then you just draw some lines where it seems reasonable, if you align your thresholds with any existing standards, or if you also use a completely different method. Can see some answers coming in. Thank you very much. Give you a few more seconds to get a better view. So the initial threshold setting and the drawing the lines on the final matrix, they're head-to-head. Seems to be those two most valued methods to set thresholds. But overall, as you can see in the results, it seems quite spread. This is definitely done in various of ways. And this is probably because we all know that the ESRS, they don't prescribe how to set thresholds, but they encourage companies to align it with their business circumstances. And as we can see here in the results, this seems to be done quite specifically for each of your organizations. So then on the next slide, I will share some tips on how we set the materiality thresholds with our clients. So for the impact assessment, we recommend to take the definition of your scoring criteria into account. For example, what do you define as highly likely? Some of our clients, they count over 50% chance of occurrence as highly likely, and others, they start at 90%. So this is quite a big difference in how you approach the scoring criteria of likelihood, and this should also be reflected in where you set your materiality threshold. And another example might be the scope. So what number of people are affected? Is high more than 20,000 people? Is it more than 5 million people? So also what you consider here might change the threshold setting. And for the financial materiality, we really recommend to align your thresholds as much as possible with your enterprise risk management, with your financial reporting, or any thresholds set by your investors. Information that you have definitely helps to set the financial materiality threshold. And some other points to consider are that the thresholds for the impact assessment, for the financial assessment, they do not need to be the same. You can set different thresholds there. And also you can either set the threshold in advance or you can set it after the assessment. And overall, really the most important thing is to document your reasoning for choosing the threshold for assurance purposes. So as we saw in the poll, you all choose very different approaches to setting your materiality threshold. This is okay, but it's just important that you document your reasoning and that you write it down so that it's clear why you chose this specific approach to threshold setting. And I will now hand back again to Alexandra to guide us through some more recommendations.
Okay, thank you, Johanna. So we've heard quite often during this webinar, document properly for assurance processes. And accordingly, I want to summarize a bit our experience with different auditors and derive some suggestions. And the first is, is really the most important one. So involve your auditors from the beginning of the process and seek feedback on crucial milestones or decisions you take. So this is especially relevant for the aspects we covered in this webinar. So the level of assessment and the granularity of the assessment and the threshold setting and the scoring methodology. So we experienced that there's quite a difference in interpretation and expectation, also accounting, of course, for the situation you are in. So there is not the perfect solution your auditor will go with. So we really want to encourage you to just quickly chat with them, show them your approach, and seek a first initial feedback. So also bear in mind that everybody's learning at the moment still, and there is room for interpretation, and we will see this also in a minute in the Q&A session. But we saw that the implementation guidance, the ESRS, are providing hints, but leave room for interpretation, and they also have contradictory parts and details. So you therefore can really be also brave and make a well-founded decision and discuss this with the auditors. So try to understand the must-haves and the nice-to-haves and act accordingly. And this is really, again, about taking decision, documenting decision, and resonate in the light of what is the ultimate goal of the CSRD, as was outlined by Mario at the beginning. So the third point is it's really crucial to document your approach, the decisions you took in a way that they are comprehensible for an external auditor, but also for you and your colleagues in the next year when you are about to update your materiality assessment. This is something that we also see quite often in the huddle and hectic of finishing the process, going to the reporting. Documentation sometimes seems great, but then if you look at it a year later, you notice, oh, who was deciding what? So we really want to encourage you for proper documentation. We are working for this with a standard handbook, which is adjusted to reflect the real life processes, the decisions taken. And such a document, if you build it for your company, could also contain like the internal controls, responsibilities, and so on. Yes. So I think we already spoke for quite a while, and this leads me to the Q&A session. I think we can move there. We see already some questions, and yeah, handing over or inviting also Mario and Johanna for this section.
Yes, exactly. Thank you very much, Alexandra and Johanna, for those very interesting insights on the double materiality and the experience with this process. Maybe a first question I would like to raise, and we also quite often get that, is now with the CSRD coming into force, what is then exactly the connection between the CSRD and the CSRD? And maybe Alexandra, you could say a few words about that as well.
Thanks. Yeah, that's a really interesting question, and we prepared accordingly. So to oversimplify a bit, the CSRD, the Corporate Sustainability Due Diligence, this Due Diligence Directive, is that correct? I'm always huddling with the abbreviations, but basically tells you what you have to do in terms of conducting a responsible business, and the CSRD tells you how to report on your efforts and performance. And it is not as simple as that, but let me share some thoughts on this, since in our view this is important also to consider right from the beginning when starting with the CSRD, and that's the first point. So the impact assessment. So both directives have a kind of an impact assessment. So as part of the materiality assessment, we spoke about this, and the identification of adverse human rights and environmental impacts from the due diligence directive goes in a similar direction, but focuses on the negative aspects, but both along your value chain. And so in our view, these processes can and should be aligned, since it would be really strange to identify impacts in one assessment that will not show up in the other. The prioritization of impacts follows the same criteria for the impact view, so the severity and likelihood assessment, but the thresholds might be set differently. So Johanna just explained there is room for maneuver, and the CSRD has again a more strict view on when is an issue really a salient issue or an issue to consider. So to align these processes, we, for defining the scoring criteria for severity and likelihood in the DMA approach, already built on the OECD guidelines UN guiding principles to allow for this alignment afterwards. But it can be that it's the same impact, but in one directive it's material, in the other it's not, depending then on the thresholds. The third bucket reveals the main difference between both directives. So while CSRD, as I said, asks you to report on your strategy for each material topics, CSRD clearly asks you to prevent, mitigate, and remediate the impacts, depending on the leverage you have. So this is, are you directly involved, indirectly involved? These aspects, probably from GRI, they are not mentioned in the CSRD. So in double materiality, the leverage is not relevant from a formal point of view. But of course, you already can consider it to then decide what will we do with the results from a strategic point of view. And there is a difference of a material impact that is caused directly by you, or that is caused via your business partner. So here we'd like to encourage you also to think a bit beyond CSRD already, even though we know that it's quite a burden already. On climate, they are both pretty aligned, I would say, targeting for the 1.5 degree target, and then stakeholders are mentioned in both. We heard about the stakeholder engagement in the CSRD. For the CSRD, a more intense stakeholder engagement is required, and first of all, not only for the identification of the issues, but along the whole due diligence journey. So stakeholders also to be involved in the prevention mitigation efforts, and therefore a broader approach to stakeholders needed. But of course, if you show in your double materiality assessment that you accounted for the stakeholder groups, that you identified the impacts on your stakeholder groups, there again is some room to streamline the processes. Yes, that's in really short, but yeah, just since we know that there's some confusion on how these both directives work together. Important reporting on CSRD is your CSRD report, showing again how closely they are interlinked. And with this, I think we have a couple of questions I'd really like to open up and hand over to Mario.
Yes, we have a few questions, especially also on consolidating, on how to consolidate the double materiality assessments. And I think we go through a few of them in the beginning. The first question is that currently there is one affiliate in this example who has to report, and the question is, if the group is then only required to report from 2028 on. I can maybe quickly answer this question. So first you look on the affiliate level, who has to report. Those companies, they do report in the given years. If the group is a non-EU group, the group might fall under the reporting requirements from financial year 2028 on, but there are also certain thresholds. So the group needs to make a revenue of over 150 million euros in the EU per year. And also the biggest of the affiliates needs to make 40 million euros a year. Otherwise, you don't have to report on group level, but then only on the level of the affiliates. Then maybe next question I can address again to Alexandra, and that one was whether eventually it is the aim to have one double materiality on group level.
Okay, so there's a differentiated answer. In the end, if you are obliged to report on group level, then you have to have a double materiality also on group level, indicating for the group level what are our material impact, risk, and opportunities, in consequence, material subtopics, topics, and data points you have to report for the group. So the answer is yes. There's different ways to get there. As I described, you can also build it from individual assessment, your affiliates, aggregate them. So there are different options.
And maybe to add, but if you have to report on group level, there will be a double materiality on group level necessary. Exactly. Then one other question, and I address that again to you, Alexandra. How would you suggest to onboarding acquired company or new companies to a top-down group level double materiality, which already has been conducted?
Mm-hmm. So this depends very much on the business model of the new company you acquired, I would say. So we suggest that you do a thorough assessment documentation of the main drivers that I mentioned. Understanding, is the value chain different? Is the business model different? And is it different that you can reasonably expect that there are differences in materiality? Or the opposite, is it so similar, the business, that you can reasonably discuss that there won't be any deviations from your group assessment? But even in this case, we really suggest, at least at topic level, to do a rough assessment, to document properly, because it's quite, it's might be rare that the business model is that similar, that the value chain is that similar that you really don't expect additional topics popping up. And how you could onboard would be, for example, as I said, identifying the areas where you think deviations are to be expected, and then start with an assessment of these topics that are impacted and take it from there if you want to prevent to do a full-fledged assessment with the same approach as you did on group level.
We have one more question, which is actually two questions in a similar direction. So I again would address them to you, Alexandra. And one is that in a group there are 5 affiliates, so the group has to report, but then only one of the affiliates is above the thresholds. But do all 5 have to report, or is it only the one that is above the threshold?
So in my understanding, the group has to report and include the information of all affiliates. Since it is a group report, same as in financial consolidation, where you would also consolidate your financial numbers also of the smaller partners. So in this case, you have to expand really on the entire company. There might be individual topics and data points where you can show that there is no materiality. So you report on the data point level, have some reasons for omission, but that's a totally different story that we cannot cover here. Happy to do individually, but globally speaking, you have to report on your entire company, yes, and take the information from all
And the
affiliates. But Mario, yeah.
And the additional question would exactly go into the direction what you mentioned. So if, for example, only of one of the small affiliates a topic is material, and the example here is water use, for example, if then the whole group has to report on water use, or if it is enough to report on water use only for the affiliate.
In our understanding, it would be enough to report on this level if you can show that it's really only material there, because this accounts for this guidance of the ESRS to say, okay, indicate any deviations and report on them. And so, yes.
Great. I have another question on the evaluation of the scoring, and that one I would like to address to Johanna. So the question, if there is any guidance available on the granularity of scoring, on how the scoring has to be done, exactly.
So unfortunately, there's no guidance on how to kind of evaluate what is a 1 in scope, what is a 5 in scope for you and your company explicitly. But there might be some recommendations. So for example, if you look at the criteria of scale, you could align this with human rights violations, because it kind of looks at the gravity of the impacts you have on the people. So connecting this to human rights violations might make a lot of sense. And also for the scope, and I think there was a similar question here, the scope definitely depends on, for example, the number of people that are affected, and so your client base might be quite a large group of people. Also, the affected communities might be a very large group of people, might be even globally the full society on Earth. And so for this, we would definitely recommend to look at the number of groups, the number of people in the groups that your business is dealing with. And then especially, and this is the other question that was asked concerning scope, for your own employees, yes, we would recommend to align the scope with your employees, with the number of the employees that you actually have in your own operations. Because if you say the scope of 5 is the global community, impacts in your own workforce would never become material, because it's probably a number of like 1,000 people or maybe 2,000 people. So we would recommend to align the scoring criteria really to your business circumstances, to see what does your value chain look like? What kind of products are you buying? What kind of processes do you have? And then see how scale, scope, or remediability align to your specific business circumstances. But unfortunately, there's no implementation. It's not mentioned in the implementation guidance how to exactly define those scoring criteria, unfortunately.
And I think the implementation guidance also does not indicate if you need to use a scale from 1 to 4 or 1 to 6 or 1 to 10, for example. So there you can also, you are free, but it's just important that you are consistent, and as mentioned a few times, that you are documenting all these aspects. As we are heading towards the end of the webinar, if you have any additional questions, feel free to also send them to us by email, reach out to us by email, and maybe we could have a look at the last two slides once more. Exactly, thank you very much. As mentioned in the beginning, at LRQA, we are supporting companies along their CSRD journey. We are supporting companies really throughout their whole journey. So on aspects regarding compliance, we help you figuring out where you stand regarding CSRD compliance, so how ready you are, what the gaps might be in the data that you have currently available. As you can imagine, we also conduct and support companies with their double materiality assessments. We help you setting up the reporting with the reporting approach, but also help you setting up the data management. And we also support you during the audit process. So we can, for example, do a dry run with you, so to ensure that you are ready for the time when your report and also your double materiality assessment will be audited. At the same time, we are also supporting you on sustainability matters when it comes more to performance aspects. So that means to due diligence processes. So if you want to set up those processes, as you can imagine with the CSRD, this aspect will become more and more important. We also help you with your sustainability strategies, so setting them up, but also setting up the whole governance around them, the policies, and so on. We help you develop climate strategies, transition plans to ensure that you abide to the 1.5 degree target. So it is really a full package of sustainability related services, CSRD related services. And on the next slide, as you can see, you can really feel free to reach out to us, send an email to, here we indicated Alexandra, but also feel free to reach out to Johanna or to myself. And we would be happy to support you on your journey towards CSRD compliance. I would also like to take the chance to thank you again for your participation, for the questions, for the interest in this webinar. As mentioned, there will be a follow-up email with the recording and with the slides. And with that, I am happy to wish you a nice rest of the day and wish you a nice rest of the week as well. Thank you very much for your participation, and talk to you soon.
Thank you also from my side, and yeah, fingers crossed, and have fun with double materiality and CSRD.